Hello and welcome into the KE Report. And this is a special edition today where we're going to be interviewing Bob, also known as BDC, on the KE Report. For those of you that have been following along with the KE Report for a while, you know that Bob's a longtime listener, but also someone that posts a lot of charts on our forum. And some of them are so interesting, and the technical analysis Bob does is so interesting. I thought it'd be fun to have him on the show and just to share a little bit about how he approaches charting, how he approaches trading, but then we're going to dive into the NatGas markets. But first, Bob, maybe to share with folks listening in that don't know you, how you got into technical analysis and trading.
Well, it started in New York City, and I happened to lose a job there. Pretty good job. It was in financial services, actually financial printing. But how I lost it, no big deal. But what do you do when you lose a job in New York City? You go to the track. What I did is I went to the Belmont racetrack and I said, "Oh, I tried to make money and all this." And I ran into a guy that uh, very interesting fellow. We may talk about at some point. And he got me into charting. And I started charting the win odds. And 8,000 races later, it really ended around 91, 92. I said, this is good stuff, but I'm not good enough at it. So I had to get another job. And in the early 90s, I got a job in the DC area, also in the same type of business. It was financial services, it's financial printing. It has all to do with initial public offerings and things like that. So I've been involved in finance one way or another for 35 years or more, actually, much more. But the charting, to me, my mother said I had a good eye for composition. I can look at most charts, and more times than not, I can say, hey, it's going to go here, hey, it's going to go there. But you know what, Shad? That's not good enough when money comes to mind. Money really puts the pressure on, and when the pressure's on, you make mistakes. So I got into even back then I got into a little bit of gold and silver and stuff like that. And then around the turn of the century, I got in with some guys called Avid Trader and Old Man and Top Expert and people like that. But I didn't take to heart to really learn this stuff. Even so, I got lucky and I made enough money so I didn't have to work more than 5 years, three times in my life for any company. And I got by. And then I made a lot of money. And then in 2005, I made the best buy I've ever made in my life and gave it up too early. I won't go into the details, but I'd be in tremendous shape today if I hadn't screwed it up. So, making a long story shorter, about 5 years ago, I said, Bob, don't you think you ought to learn this stuff? So I really went back to what I had done. I came around KER around 2014. That's when I made a mention about the dollar index going from 80 to parity, which it did. And for various reasons, I was darn sure that that was going to happen because I saw gaps up there. And a gap, a half a point gap in the dollar index is trillions. Eventually, they're going to equalize that out, and I kind of knew that. And I picked that kind of stuff up naturally. But uh, I still screwed up. I did not take it to heart to make money, and there's a long backstory on that. But let's just start 5 years ago. 5 years ago, I was trying things, and finally I found an indicator which we'll get into. I call it saturation. What it really is trend quality, and I'll get into that more later. And then I just kept on keeping on. And about 3 years ago, there's a fella on the site called Larry, and he got me interested in natural gas. And natural gas is wow at the time. Kind of bad luck. My bad luck is good luck for me because even though I lose a few bucks now, I learn a ton. And I got into it and I said, "Oh wow, I'll even take the PMs, the precious metals, and put them to the side and focus totally on nat gas." And the PMs streaked, and Bob languished with nat gas. And the worst of it was, Shad, the worst of it was this past January when Brandon, I call him Brandon, President Biden, came out and he started dissing, really creating problems for LNG uh, development, liquid natural gas development, which destroyed the pricing for natural gas. And that was really disheartening. But I kept on anyway, and I still missed all these nice uh, takeoffs for the PMs. By the way, PMs, precious metals, are my secondary. My secondary are precious metals. My primary is natural gas. And I also, by the way, might get into it. You might notice it on the saturation chart. I have NVIDIA on there because that is a monster stock on its own merits. But that's for the future moments. So anyway, I get into natural gas, and here I am. I just recently, within the last few months, I started using TradingView, and I really, really like this site. I also use Fidelity Active Trader Pro, which is also for me a necessity. So those two. But what you'll be seeing today, folks, is TradingView, and what's up right now is the report I put out this past weekend on Saturday. And what you've got there is kind of a long term, in fact, it is a longer term chart for natural gas. And you see my little note about old Brandon up there. And then it did a nice bounce and then came all the way back. Boy, this is what they do in this market. They drive it all the way to the bottom, which we'll get to in a moment. And off to the right, you can see where I say that it's a 38.2% retracement. And also, this is a beautiful, that people talk all the time about a cup and handle. Look at the double cup and handle we've got working here, sort of. Way to the left, and then here to the right. This baby's ready to rock and roll. I'm going to tell you right now, this baby is ready to rock and roll. But uh,
Well, Bob, let me jump in
Shed,
here real quick and just
yeah.
ask you to define when you say a retracement of 38%, I think you're talking about Fibonacci numbers. For those not familiar with charting, looking
Oh,
at this, just explain what you mean by that.
oh, I'm sorry. I apologize. In fact, we'll get into that a little bit more, but the Fibonacci ratio is the most important ratio in nature. There is another one called the Lucas number, which is really strange, but it's also just as important. And the top market timer that I know of uses that for longer term things. But the Fibonacci ratio is rabbits. You know how rabbits multiply? Well, that's how they multiply. 1 plus 1 plus 2 plus 3 plus 5 plus 8 plus what is the next? 13, 21, 50. It just goes on by that same ratio. And that ratio happens to be 61.8%, 1.618. And its complement, 0.382, is so important because in an ongoing positive trend, powerful trend, a pullback merely to 38.2% is considered by top traders to be very bullish. That's why I pointed that out here.
And Bob, just to clarify, there are other levels. Some people use 50%, even though it's not a Fibonacci
Hmm.
number. They use 61.8. So there's different
Right.
levels that a pricing point can either extend to or pull back to, and that's how you utilize Fibonacci numbers with charting, correct?
Exactly. And the 50%, yes, you're right. Some people even include it as Fibonacci, but 61.8 is a Fibonacci number, and the better one, when it even breaks through that, is 78.6%. Those are the really deep ones, which we may even see in the future. I don't know if I have that in an example today, but we'll see.
Well, and walk us through on this chart what you're seeing with natural gas. So for people watching that just say, "Hey, to me, Bob, this looks like squiggly lines on a chart." What are you looking for? What are you noting with the pullback, and what do you expect to happen?
Well, as I mentioned, the whole chart, there's a pattern called a cup and handle pattern. People can look it up, and if you look at the right actually the right half of the chart, or maybe a little bit more, you can see there's that one peak, and then there's a little peak higher, and then it goes down, and then there's another peak, and then a trough, and then a peak a little bit higher. A lot of people look at just that section there as being like a cup and handle. Ignore the first peak on the left, just go to the top one. And if you look at that, that's like a teacup. That's like a cup and handle. And that is in the thinking of many traders, that's very conducive to going higher. Now, it'll be broken. I'll say that right now. I mean, there's nothing easy in this game. It'll be broken if it goes back down and takes out that 38.2. In fact, if it gets too close to that, I would say, well, I'll look for other things. But this one right here is very powerful right now. So I hope that's enough of an analysis for this moment.
Yeah, so a lot of people will know that, when you see that teacup shape, that after the handle formation, which it looks like it's just done, if it breaks above the rim of the cup, those two prior peaks, then you've got a breakout on your hands. Maybe take us into that next chart you have, the pullback golden C target zone, because then we'll be able to see some better pricing action on the NatGas chart.
I'll do that, but before I do that, I think it's kind of cool. Look farther to the left and see when it breaks that one too. That's a bigger cup. That's it's a little bit more. It's not quite the same thing. Yes, the next one we're going to go to the pullback golden C target zone, and I'm going to hit that right now. And let me know if it shows up, Chad.
Yep, looks good on this end, Bob.
Okay. Now this I developed last week going into Saturday, or probably Friday into Saturday, and I was developing all the possibilities of the pullback from what I was pretty sure was a top, but I didn't know that for a fact. We will go into that a little bit more later with the saturation. But so I figured, look at these dual lines if off to the left. You see all those. Now, what you're seeing on the left, people, is like far left. Go to the far left, probably the best example. That is a what I call a Fibonacci ladder. A Fibonacci ladder is static. It doesn't move, it's just there. The box that it represents is important, but still it's static. But it just lets you know where you should be looking for bogeys. Where is it going to turn? Okay, we'll check. If it shows strength here, okay. It let go there. Okay. And by the way, if you're going to do what I do, keep very slim stop losses. That's what Paul Tudor Jones does. I learned a lot from just listening to his commentary on that. So
and Bob, if
here,
you want to show us with your cursor, we'll be able to see your cursor. So if there's anything you want to highlight, just move
okay.
your mouse around, and we'll be able to see that.
Sure. Well, there it is. There's not much for me to do here. Let me see. This whole page is a picture in itself. But let me go to the left and just explain to people with the primary box here. The primary, by the way, down here, this is effectively the all-time low for something we're not going to talk about today, the UNG, which is the natural gas ETF. Right now, we're going to use this chart here, which I didn't go into, and I will right now. This is called a contract for differences. This is a different chart, but the ratios are important. They're relative. They're the same ratios, but I find this a much better chart because near the end of every month, we get crazy contract changes in the commodities. This eliminates the craziness. And so I use this because of the smoothness. And sometimes this baby actually gives me a future that nothing else does. So that's why I use it. So let me continue with the Fibonacci on the left. Okay, here's the top. They call it 0. Here's the 23.6% down. That is a Fibonacci number. It's into the square roots, etc. Here's a primary Fibonacci number. The primary Fibonacci is right here. That's 61.8%. The complement is right here. 38.2%. 50% is always included. It's not really a Fibonacci number, but let's face it, it's the most natural number there is. It goes down. What are you going to do? I don't know. 50-50. Okay, so then here's this. Now here's the 78.6%. Very important too. That is a square root. I believe I'd have to look at it because I'm no expert in these things. Once I know what the numbers are, I don't care how we got them. But anyway, this is a square root, I think, of 1.618, but I could be wrong. Or it might just be 0.6, probably 0.618 square root. But that's from way back. I learned it once. It's the kind of learning you do when you're in grade school, maybe high school, and you don't want to know it again. You just want to know the bottom line, and that's what it is. Very important, 78.6%. Okay, what do we got here on this page? Number one, here's box number 3. This is box number 3. This is all I had to look at on Saturday. This is all I had to look at. What you see here is all I had. So I took box number 3 and I put a Fibonacci ladder here. And then, okay, and at the same time, I looked at box number 2, which is right here. I put a Fibonacci ladder right here. And you could see it. Now, the important thing is, look how these match up. Isn't that beautiful? Boom, 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 boom. We'll come to this in a minute, but these all, or some of them, had a real effect, even though they might not hold. Very often you'll get a pause at a very important Fibonacci level, but it won't hold, but you'll see it bounce. And it's a beautiful thing to see. It's like a conch shell. It's like a conch shell. It's like the reason that the conch shell does what it does.
Well, and just a quick
Okay.
point, Bob. A lot of people looking at this still may think, well, I see all these lines on the page, I see these boxes, but I don't know how to utilize them. But what you just said was very important. A lot of times pricing will either approach those levels as support or resistance, or when they break through them, you've got a clear breakout or a breakdown. So maybe just talk about when you overlay these. And most people's charting software, you can put these Fibonacci ladders on there, but just how you use it in conjunction with price. I think that's the key takeaway.
Exactly. Well, the reason is I see strength. Anytime I see a multiple here, I see strength. And anytime it breaks through strength, that's an obstacle on the downside, which has been overcome. So beware, beware. And make sure that if you bought there that you have a very slim stop. You don't lose much money. That's, you might buy this, you might, or you might short. There's a way to short this using ETFs, and you might do that all the way down, but you don't lose much money because you get out fast, 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 fast. That's what Paul Tudor Jones taught me. And so anyway, these, I'll just cut to the chase here. These all broke in the end. Every one of them broke. And we will get to that in just a moment. But I just wanted to bring this forward because I could do this on Saturday and I could lay all this out. And then I could just look at a lot of this stuff. I didn't fight this stuff. Most of it I didn't fight, although some of it, when we got down here, I did start fighting. But I didn't fight here, 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 here. I put a few negative ETFs. I won't say what they are at this time, but I put a short ETF, and it didn't hold. Now I have a method that I use. I have a very small number that I'll hold because I'm very bullish NatGas. I don't mind losing a little bit of money, but I won't lose much. And if I tend to go overboard a little bit, I'll sell it back before we go lower. Anyway, you
Just
can
a real
see
quick
what.
follow-up on that. So you're using inverse ETFs as a hedge if you think the pricing is getting down close to a support level, just in case it breaks. But let's look at the upside of this, Bob. When it's approaching that
Right.
zero line, do you think, I guess everybody's watching this going to think, is NatGas going to break higher? Is it going to break above that zero line? That's what we want to know, Bob.
Oh, I know the zero. Now the zero line you're talking about is right where my pointer is right now, and that matches the. Well, it matches many all-time. This may be an all-time low in UNG.
Oh, I
Now
meant
that doesn't mean.
I meant the zero line at the top, like the very top, near the
Well,
315. Yeah.
the zero line at the top merely means the top. What you're looking at here is down to here. This is 0% down to 100%. Look at it. The better way to look at it. 0% down to 100% here. 0% down to 100% on this very important box here, and 0% down to 100% down to this ultimate box here. If it breaks here, Shad, I won't be losing too much money, but I will be losing some.
Yeah, my
Because
question was, will it break to the upside above the smallest box there where all three boxes line up? The very top where you're getting into the $3.15.
well,
That's what we want to know. Can it break higher?
oh, it definitely can break higher, but let me explain to you something. I don't know the future, and neither do you. Every significant event in the future, anything significant, believe me, is a 50-50. The odds can be 100 to 1, but you know what? That next significant point can be that one. So we don't know. So we do the best we can, and this is the way that we incorporate not statistics, but numbers, the Fibonacci numbers, to do our best with the statistics. Like I said, I started buying down here, and I figured it was going to go lower because I know the way natural gas, this is just plain experience. I know that in natural gas, they really pound them down. They really do. But I don't know that for a fact. So I buy some right around in here. And I'm still holding. I actually bought too many. I sold half back, but I'm still holding about half of what I bought right around here. And when I say right around here, there's a different vehicle that I use. It's an ETF called BOIL, but the ratios are the same. The relationship is the same. So that's why I love the CFDs. Anybody, well, all I can do is I suggest to people, if you really want to analyze at least natural gas and probably other commodities too, use a good CFD that you trust because it's much more accurate. But anyway,
Well, one
here
last
we
question
are.
here because we do need to get moving
Okay.
on, Bob. So
Okay.
will you
Okay.
be looking for, if pricing was to pull back to some of those other, like the 0.38, the 0.5, the 0.618, is that where you would hedge with an inverse ETF? Would you be watching to how it responds to those support levels down below? All those lines on the chart really equal Fibonacci support level. So how will you be
Right.
looking at price in relation to
Okay.
those?
First, I'll just make it brief here. I made a mistake. Not a mistake. I made a strategy change on Friday. I have a rule that I don't hold over the weekend. I am now changing that rule. Absolutely changing it. I'll tell you why. Quick story. If I had gone short on Friday, which was up here, using KOLD, which is the short, if I was wrong, I'm not going to lose too much because I know using a certain thing that I could go into today. Let me know if I have the time. I won't if we don't. But I know that we're very likely at a top. From now on, I'm going to go short a small amount. I have a way of calculating the small amount. The reason being that once I get in here, I have no reason to try and go long. I'm just going to want to see, is my short still holding up? It'll save me money. It'll save me the half that I went here and got back out of, and maybe even the little bit that I went anyway here on the long side. So that's just a quick quid pro quo on that, just to get it out of the way. Now, uh, we're pulling back. We may have pulled back. We may have pulled back. I'll go into why I don't think so, but it's possible we have. We don't know the future. But now you tell me what to do next. I think I should go to the next chart.
Well, I think for the sake of time, yes, go to the next chart, and then we really need to get into your saturation, and then
Okay.
wrap over there. So show us
Okay.
the next chart on NatGas.
Okay. Here we go. This is today. This is how it turned out. You can see here's the bottom over here. And you can see that, remember, I talked about that confluence of lines. Look at how it's beautiful. This, for your information, is what I call a back box. I don't know if it's unique to me or not. Some people do, everybody does ABCDs, and they're very accurate. However, sometimes there's no way to do an ABCD here, which means down, up, down. It just doesn't make sense on this one. However, if I go from here, which the amount is over here, and use this trough, this is the answer I get, 2.848, and the actual bottom today was 2.852. pretty close. Four pips. They call these pips.
Very close.
So yes, very close. And now I actually am hoping, there goes hope, but I'm kind of hoping we actually do go deeper here. Even though I've got some money in over here, I actually hope we do go deeper. And should I advance to the next one?
Yes.
Okay. I knew we were kind of running out here. Okay, here we go. This is the saturation chart.
And before you get into this, Bob, I just want to let you know that on the KE report, you've posted this many times, and you've tweaked it over the years here, and you've got it to a pretty. At first, it's a lot for the eyes to take in. So maybe just try to boil it down to the simplest explanation. We don't
Right.
have time to get into how deeply, but how you use
No,
these
no, no,
different
no.
tables to look at different sectors and when there's going to be turns in the sector.
Well, this can't be simpler. In fact, I hope people like Eric Wetterling or anybody that's worried, I put a lot into this. And when I say this is a top, this is a top. When I say this is a bottom, this is a bottom. When I say this is a top, this is a top. When I say this is a bottom, this is a bottom, to the best of my ability. I don't know if I've ever been wrong. Usually I have this thing I call the gray, and I should have left a gray up. Oh, here we go. Yeah, here's one I'm not sure that's the top. This is NVIDIA. I'm not sure if it's topped yet, so I leave it gray. But even a gray can be traded. Even a gray, if it's high and you're thinking about selling NVIDIA, well, if you got anything that's quite a bit better, go for it. Or if it's low and you're thinking about buying NVIDIA, well, don't buy the whole amount, but pick up
Well, Bob,
some.
we should also say that for people, again, that are not used to looking at this, on the left-hand side are the different ETFs. You see UNG, you see
Yes,
GDX, GDXJ, HUI, and NVIDIA was at the number 9, that line.
right
So that's what
there.
so for people to get oriented that haven't looked at this before, you've got your ETFs on the left, which are basically your sectors. And then as
Right.
you go across this table, when different numbers show up, they're really proprietary factors you're looking at that are stacking up in favor of a top or a bottom.
What they are, I will go here real. I don't know if we should. How much time have we got? This won't take long, but it'll give people a flavor.
Yeah, just really quickly.
Okay, this is by what is saturation. Hopefully it comes up. Oh, maybe it won't come up. Oh, maybe I'm on the wrong one here. I'm going to do one thing real quick. I'm going to do this, because maybe I'm on the wrong one. I might be on my natural there. Okay, here we go. Okay, here we go. Yep. Redirecting. Come on, guy. Might take a while here. Okay. Trend quality. What saturation is, I might even rename this to trend quality saturation in parens. Trend quality is just what you see. Rounding tops and rounding bottoms are best. When it's calm and smooth, you don't get big numbers. When it's stormy and choppy, you don't get big numbers. But when it's a comprehensive move, and you've seen these, everybody's seen them, these beautiful rounding tops and even rounding bottoms, that's what the 6 and 7 level is all about. Okay, I've said that maybe for a future time. Okay, we're back here. Here are the numbers. The numbers are important, but they're not all important. Here, the turn is at 2. The turn is at 5, 6. But even so, I eliminate everything that came before, but you would have seen other good looking numbers here too. But when you combine the trend quality with your other analysis, technical analysis, and maybe fundamentals too. You can throw fundamentals in here too. Hey, it's hitting the timing of the FOMC report just right. Or a day later or the day before, which is usually the case. That's the beauty. That's how this is good. But just throwing all that aside, Eric Wetterling, when you're going to buy something and you see this approaching red after having been here, and you're going to buy something, all other things being the same, wait until you see red over here. You save a few. I believe that Eric Wetterling will make an extra 10% over the life of his career if he just look at something like this, knowing where the top was and where the bottom was, etc.
Well, I'm going to jump in here real quick, Bob, and just say Eric Wetterling is our good friend, the Hedgeless Horseman that we actually just talked to today, and we'll have an interview up with tomorrow. And Eric doesn't look at technicals; he's a good buddy of mine, so we were
I
giving him
know.
a hard time that he's just buying based on what he decides is cheap fundamentally. Your point, Bob, is that you can use fundamentals, you can use charts, but then using these tables that you have kind of give you an indication of when a bottom's coming up or when a top's coming up. So if you
Well,
lay that over with your charts and you look for
yeah.
overlays with the fundamentals, if you've got multiple data sets stacking up, you have a higher conviction trade.
Well, believe me, I'm not knocking Eric Wetterling. He is like a type of person that just doesn't even look. And I'm just saying, hey, take a look. Just take a look. No, I'm not knocking him at all. In fact, guys like him, he's out there on the outer reaches, and he doesn't got time for this stuff. And I'm just saying, hey, take a look back. You
And the
might
goal
say,
being that you hope that people make better trades and that maybe you buy at a better level or you sell at a higher level. That's the idea, right, Bob?
well, that's it. It's to and another thing to maybe think about is stop losses. Elegant and creative stop losses. It's like when I when when I like I think I was telling you. I don't know if we talked about it on this recording or not, but I'll go into it. An analyst looks at something like I am basically an analyst and looks at a beautiful looking chart, a PM chart, let's say gold or silver, and says, and it's down. And he says, that looks good. But what he does, he goes back and finds a realistic stop loss, again, looks at the chart, and if the risk reward makes sense, he puts in the trade. A trader does that. An analyst does the opposite, almost the opposite. He just says, let's see what happens. And I'm saying, like, Eric is a trader. He really is a trader. Or he's a fundamental trader, but he's a trader. And uh, all he needs to know is this the time to buy or not? If all druthers aside, if I can wait a few days and save 10 or 15%, what the heck? But no, no, no. I know Eric is a friend of yours. I'm sorry I even bring it up, but I think he's a good guy. I've listened to his stuff, and he's always got good stuff. And I think everybody should look at this chart. I think this table is what it is. It's not a chart. This table I think is the most important development in technical analysis in decades. In decades, I concentrate on only two things: tops and bottoms. Who cares about anything else?
Well, Bob, maybe we should wrap it up there because I think the main takeaway is you're trying to share a system with people that has a data-based approach. And if you use charts for technical analysis in concert with this table, you can pick the best spots or at least ideal setups to buy low and sell high. That's kind of the idea in investing anyways. And so we'll have you on again. We'll get into this again, but this is just a initial snapshot of the way Bob BDC looks at the markets, some of the charts he was looking at in NatGas, and then this table that he has with multiple sectors highlighted on it. He's even got tabs and tables that cover other sectors. But for the point today, I think it was nice for you to share how you look at markets, how you look at trading, how you use both technical analysis and then these different saturation factors to figure out where to get the best possible entries and exits. And so we'll wrap it up there for today, Bob. But great having you on the KE report. Great having you share your system with us. And I'm sure that we'll do some of these video segments in the future where we can dive into the charts visually so people can follow along. Thanks so much for showing up on the KE report, Bob.
Thank you, Shad.